just to lay out one of the major themes, one of the biggest, I would say, not idiotic. Okay, it's one of the major, what do you say, left curved bull cases is the Fed, the current U.S. administration, at some point soon is going to step in because the economy is not doing well. So this is just outside of crypto too, and they're going to start turning on the money printers, and when that happens, it's going to reignite everything. So that's the kind of the base case for that. Some people think that this is a bearish bull case because you're basically relying on some exogenous force to step in and save the market. I don't know. I feel like this is kind of a bullish thing, and we've talked about this since September, right? With Arthur Hayes has said this since September. I think that politicians absolutely will try to step in and save the market, right? They're incentivized to do that, especially going into next year, the midterm election. So this seems very, very plausible, and it's kind of my base case, which is, yeah, the market's going to suffer, but at some point, yeah, this exogenous force is going to step in and make everything go up. So that's one. And we can get into a bunch of other like bullish hopium things. I don't know if you want to show some of these, but like Hunter Horsley of Bitwise, he has been on a tear this past week, releasing post after post on crypto Twitter, really kind of highlighting, I don't use that word, highlighting, AI, really showing where, how far we've come, and to be bearish now seems very short-sighted, right? So he had a major thesis, basically saying one of the reasons that you're getting a lot of sell pressure here in Q3 and Q4 of this year is the remnants of the 4-year cycle. So these big whales are happy to take profits now, because even if they don't believe a 4-year cycle is a thing, people do believe it's a thing. And so because people believe it's a thing, it's a self-fulfilling prophecy. This is like the beauty pageant idea, right? They're selling not because they think the 4-year cycle is real, but they think that other people think the 4-year cycle is real. And then if they think other people think the 4-year cycle is real, that's yet another reason to sell, right? And so it becomes a self-fulfilling prophecy. You also, he also pointed out that, take a step back and think about who is explaining why we're selling here. And if you go through Web 2 traditional media, you have people on CNBC and Bloomberg talking about this. Like, we're talking about this, right? But we're crypto natives. We're online retards. But also on CNBC and the fancy studios, the glossy fancy studios, they're doing the same thing. That's a huge difference from even like 3 or 4 years ago, right?
Yeah. In fact, 3 or 4 years ago or 8 years ago, the opposite was the case. So you would have the mainstream media being like, okay, yeah, the bubble's over. Haha, it was all a bubble. Good luck. Like Bitcoin's going to zero. Here's Peter Schiff. And then now they're like rationalizing why this is just a healthy correction. Yeah. Meanwhile, just to continue with how things have like turned opposite, the crypto natives are all like, it's over, it's over, it's over. See you next year, or see you like in 2027.
Right. Yeah, it's bizarre. It's like bizarro land right here. It's crazy. And then finally, Horsley points out that, again, I've said this in multiple newsletters and even on, I think, Token Narratives the past couple month or so. Their interface, their normal day is talking to traditional financial players, right? They're not talking really to crypto natives because they don't have enough money. And all these financial players are still very constructive on their day to day, right? Bitwise's day to day. They're not talking about, oh, the sky's falling. They're like, okay, so yeah, let's work on our deployment, and we'll start to put money in, and 3 or 4 weeks. They don't really, this short term stuff is pretty not non-existent to them. So when you get a window into that side, it probably would make you a lot more bullish on the medium to long term. So anyway, that's some hopium there. I know you have a thesis that you want to outline from somebody.
Yeah, Jordy Visser. So this is the guy who a few weeks ago wrote the silent IPO thesis that got a lot of attention. That was the thesis that Bitcoin's going through like an IPO, just like Facebook did. So the early investors, Bitcoin has become such a large part of their portfolio that they need to diversify out of it. And there's like public markets available to do that now, the ETFs, and so it can be done, right? And so that's just a natural process that, like, when Facebook IPO'd, you saw sort of a downward price action, not great for quite a while, and then the stock was became distributed amongst like a new set of investors. And that set it up for the next 10 years of like high compound annual growth rate. So that was the thesis that he presented before. Now he has published a new article titled "Light at the End of the Turbulence 2." And his core thesis here, which I've thought is quite interesting, he's basically saying that actually, now, David, we talked about how crypto is no longer Bitcoin and crypto is no longer like the darling. It's all about stocks and AI, right? That's where all the money's going. His core thesis is actually, as outlined in this article, is that Bitcoin is the purest AI trade. So, from what I understand, the way he's outlined this is like, as AI advances, as the whole AI economy advances, you're going to start to see major problems, right? Like you're going to need to have things like UBI, and you're going to have to see the government stepping in to sort of fix things, right? Like printing, and Bitcoin benefits the most from that. So it's actually the purest AI play is Bitcoin. I think that's the core part of his thesis. Now, he's also points out that Bitcoin is very similar to AI stocks in that it's still a risk asset. And David, I know this is something you've long said. It's not actually digital gold. It's much more highly correlated with risk assets, i.e., like the AI darlings. And so its recent decline here, in sync with those equities, it's just a normal risk-off behavior. It's not structural weakness. And so he's saying that if these risk assets have a strong 2026, Bitcoin should outperform them, actually. It's because it's high beta to them. And then he goes on to explain why that's actually likely to happen, that even though we are in kind of an AI bubble, it's still the early stages of the AI bubble. And there's a lot of tailwinds for us here for that bubble to keep going. We're just having a correction in the AI bubble right now, is what he's saying. And some of those tailwinds are fiscal stimulus. You've got the CHIPS Act, infrastructure spending. The one big beautiful bill is going to be flooding the economy with investment, especially front loading it towards the midterms. And then you've got the monetary tailwind. So he's saying that inflation is easing, and that also, by the way, is supported by AI, right? AI is, a lot of people are saying AI is actually deflationary. So inflation's easing. At the same time, labor is softening. So that increases the chances that the Fed is going to cut in 2026 rather than tighten. And let's see. Yeah, specifically for Bitcoins, those are the stimuluses for the tailwinds for the economy at large, the general economy. But for Bitcoin specifically, you've got the Clarity Act coming up. People are not sure when that's going to pass, but it's probably going to happen in 2026, although not guaranteed. Then you've got tokenization scaling. So big financial institutions are moving into real world assets via blockchains, and that strengthens Bitcoin's relevance. So here the thesis is like, look, as the world moves more and more onto stablecoins, and your stablecoins will be used as the medium of exchange. Once you're in the digital realm, though, you're still going to need a store of value, and Bitcoin is the the obvious choice there. So this is actually a thesis that I've sort of had in the back of my head for a long time, as with stablecoins. So even way back in 2017, like as the world moves into crypto rails, that's just generally bullish for Bitcoin, because you're just one step closer to moving. If you're already comfortable with holding assets in the digital realm, in the crypto realm, it's a lot easier to then diversify, or use Bitcoin as a store of value. And we all know Bitcoin, the world has converged on Bitcoin as the digital store of value.
I mean,
So I think that's, go ahead.
Well, I was just going to say, long term, that might be true, but in the short term, I don't think it's a store of value right now. It's more like it's a speculative play ish.
Okay.
Right.
Yeah. So maybe store of value is not the right word, but the point remains that once you're in the digital realm via stable coins, you're going to be looking. You're using it as your medium of exchange. You're settling transactions in it, but you don't necessarily want to hold all of your money in US dollars, right? So what are you going to do? Put it into, not necessarily a store of value, but an investment. So you could say Bitcoin is like a NASDAQ, a version of NASDAQ.
Yeah. I mean, I think medium to long term, it is like a store of value like that. I think, but I guess there's multiple parties that you could talk about. The institutions, the people who are buying Bitcoin now, the marginal buyer, I think they do see it as a store of value long term. And so that's why they're buying like that. But for the retail punters, the people who like get into stable coins, I think they see it just as a lottery ticket, speculative play. And that's why that kind of money, the hot ball of money, has moved on, I think, because Bitcoin is maturing. You're not going to 1000x on Bitcoin, right? Or even like a 400x or something like that, which you've seen in these AI stocks and all this kind of crazy stuff. So in that regard, I do feel like, at least thus far, that explains maybe for this year why Bitcoin has underperformed, because the buyer is kind of a more long-term patient player. And right now, you're not just Bitcoin, but in crypto, you're not really seeing these kinds of crazy returns. You're seeing it in stock land. You're seeing it in AI stocks and all that kind of stuff. And actually, here's what I think, though, Graham, is we're getting to a point now where, stable coins are becoming integrated into Web 2 and TradFi stuff. Like, look at Robinhood and PayPal and all this kind of thing. But the opposite is also happening, where tokenized stocks or derivatives that are based off of, like, perpetuals that are based off of stocks are popping up all over the place. They're on Solana now. They're on Hyperliquid. And so in that sense, it's actually stealing or taking away money that would normally be in meme stocks and this kind of crap in crypto. They're still staying on chain, but now they're like I've seen on my timeline, Hyperliquid has a NVIDIA perpetual, right? I think it launched last week or 2 weeks ago or something like that. And a lot of the traders, some of the bigger name traders, they were playing that. They weren't playing any of the crypto stuff, right? And so, in that sense, it's kind of taking away from that part of the crypto market too.
That's a good point.
Right. So I think because of the integration, it actually can kind of weed out some of this lesser stuff in crypto that normally would be getting more attention.
Yeah. So I just want to say though, David, that I am looking very closely at Bitcoin here. I'm really bullish on it. I bought a little bit a few days ago. I'm looking to buy more. I wouldn't be surprised if it actually does go down to as low as 50K. But that's not my base case. I think it's more like I don't think it's going to go lower than, I don't know, 80.
Yeah, I mean,
so I'm scaling
50,
in.
That seems crazy. I feel like at that, if it wicked, it would be a wick. If it wicked to 50, you'd see billions flow into it from like single holders. I feel like, right? Because I mean, that would be just the biggest Christmas gift you could get, right? I feel like.
So even at these levels right now, we're like at 87. I'll probably start DCAing into Bitcoin here. I think the asymmetrical gain, like the risk reward is better here. Although, yeah, I do think it's not. I think it's going to be kind of a grind here. It's not going to. I don't think we're going to see a quick reversal. But,
yeah, I mean,
I could be wrong.
I think you could see. So, what's the poly market right now for the December cut?
It's 50-50.
Is it 50-50 now? It was like 40% earlier this week. I think if they do cut, and some of the smartest non-crypto macro analysts, like what's his name, Mike Green of Simplify, this guy's as talented as it gets in TradFi. He's the guy who had been pounding the table about passive for more than a decade, and he was right for the right reasons. Anyway, he thinks that there will be a December cut, and I think that kind of surprise could potentially help here. Black Friday's coming up, right? And if the Black Friday numbers are good, as in the sales numbers, that could give you, right, because everyone's worried that the consumer is not spending and things like that. And I know in past years where it seemed like the consumer was weak, and then they just spent just an absolute ungodly amount of money. That could also, so that could also help like revitalize bullish sentiment. And so I think you could, there are reasons why even in the shorter term that you could have a decent reversal going into the new year. But again, I kind of like you, I don't think, I wouldn't put that at anything above 50-50 right now. I think that'd be a coin flip right now,
Yeah.
I would point it, but though by next summer, my base case is that the market will be, not just crypto, but markets in general will be quite a bit higher than they are now. That's kind of where I think in that medium time frame, because I just see so much spending and stimulus coming online.
Money, power.